Hi, this is Uros Markovic, realtor with the real estate district in Calgary. Welcome to my December 2025 Calgary real estate market update using the latest numbers from November. In this video, I will walk you through what is happening citywide, how detached, semi-detached row homes and apartments are behaving, and what parts of our city are holding value best. Also, what it means if you are planning to buy, sell, or invest in 2026. So let's start with the big picture. In November, the market continued to behave very seasonal. Activity slowed compared to October, but the shift we are seeing is not just seasonal, it is also about more supply and balance. Sales came in at 1,553, which is about 30% lower than the last November, and the listings were 2,251, about 3% below the last year. Inventory, the numbers of home available for sale, set at 5,581 units, 28% higher than last November and about 50% higher what we typically see in November. That puts months of supply at about 3.6 months, up from about 2.4 a year ago, much closer to balanced market. Homes are now taking longer to sell. Average days on the market moved to 37 days from the last year up to 49 days this November. So the theme for the city is clear. There is more choice, pace is slower, and negotiations matter more again. On the price side, Calgary's total residential benchmark price in November was $559,000, which is almost 5% lower than last November. At the same time, Calgary Real Estate Board has recalibrated the benchmark home for this year. Well, once a year they adjust the attributes of what the typical home actually is to calculate benchmark price, which can shift the numbers even if your specific home has not changed in value. So if you're comparing the last year reports with the this year reports, the figure are most likely going to be different because they don't get retro adjusted. The key takeaway is this: price growth has cooled. We are not in a free fall, but the market is no longer running away from buyers. Now, let me break it down by property type. We will start with detached homes. Detached homes are still the most active part of our market, and they are still sitting in relatively balanced territory. In November, detached sales were 823, down about 4 to 5% from the last year. New listings were 1,075, actually 3% up, and inventory rose to 2,444 units, more than 30% higher than last November. The detached benchmark price came at $733,000, which is roughly 2% lower than the last November, but year to date, detached home prices are still about 1% year over year. Months of supply is sitting around 3%, which is pretty classic balanced market level. The detached benchmark price came at $733,000, which is roughly 2% lower than last November. Year to date though, detached homes are still about 1% higher than in 2024. Most of the downward price pressure is concentrated in the Northeast, North, and the East districts. Those areas are competing more directly with new home construction and extra supply options, which naturally puts a cap on how much sellers can push their pricing. What this means for you if you own or want to buy a detached home: pricing needs to be sharp and realistic, especially if you're near new build communities. Well-presented homes that are priced correctly are still selling, but buyers have more options and more confidence to negotiate. For buyers, this is a healthier environment. You can breathe, inspect, and think instead of racing everything in 24 hours. Now, let's talk about semi-detached. Semi-detached homes or duplexes continue to be one of the more resilient segments. In November, sales were 166 units, very close to last year. New listings were 255, basically flat year over year. Inventory climbed to 546 units. That is the highest November level in the last 5 years, which keeps months of supply just over 3. The benchmark price for semi-detached homes in Calgary was $671,700, which is essentially flat compared to the last year, November, and up nearly 3% year to date. The big picture for semis: well, demand is still strong, especially in central area where detached homes have been very expensive. Even with more inventory, prices held ground better than most other property types. For buyers, semis are often that sweet spot between space, location, and budget. Well, let's move on to row homes and townhouses. This is a segment where we see the most visible price adjustments. Compared to the last year, November sales dropped to 257 units, which looks like a big decline, but remember, last November was a record high for this segment. New listings were 396, almost identical to the last year. Inventory reached 901 units, a level that we have not seen since November 2018. Months of supply has been sitting a bit elevated for the last few months and now at around 3.5 months. The raw benchmark price in November was 424,400, which is over 6% lower than last November. And year to date, raw prices are down by almost 2%. So after several years of strong appreciation, raw homes are now in a clearer price adjustment phase, driven mainly by more supply and more competition from new builds. For sellers, especially investors or owners who bought in a very peak, you need to be realistic about where the market is now. Overpricing will simply leave you sitting while more competitive priced units move. And for buyers, this is one of the few parts of the market where you can say values are actually cheaper than a year ago and you're not elbow to elbow with 10 other offers. Now let's take a look at apartment condos. This segment is feeling the most pressure from excess supply. In November, sales were 307 units, down 28% from the last year and now basically back in line with the long-term norms. New listings came at 555, still fairly elevated, and inventory hit 1,690 units, a record high for November. Months of supply is now sitting just under 6 months, and this has been above 4 months since summer. This is solidly buyer's market. The apartment benchmark prices in November were 309,300, about 7% lower than the same time last year, and a little over 2% lower year to date. Some areas are seeing deeper pullback than the others, especially Northeast, where year to date apartment prices are down almost 5%, while West District is basically flat. For buyers and investors, this is where the numbers start to get interesting. You have more choice, more leverage on terms and conditions, and an opportunity to buy into a certain location and prices that are meaningfully below last year while rents are still high. For sellers, strategy is everything now. Presentation, pricing, and patience. You're competing with both resale units and brand new product, and buyer knows that. Alright, now let's move on to district snapshot. Let me zoom out and look at the district map for a moment. Total residential benchmark prices across Calgary, 8 districts in November looked roughly like this. West is still the most expensive at around 693,900. Northwest follows at about 611,800. The city center sits around 560,000. South and Southeast are in the middle 500s. North is just over 519,000 and Northeast is around 476,900. East remains the most affordable at 413,000. What matters for you is, if you are in an inner city or the West, you're working with the higher price points but relatively limited land and infill opportunities. If you're in a growth corridors like Northeast, South, Southeast, or even out towards the Ring Road, you are competing directly with new developments and their incentives. Where you sit on this map will heavily influence both your pricing strategy and your time on the market. What this means for buyers, sellers, and investors. Let me translate all this into practical advice. We'll start with buyers. You finally have more choice and more time in most segments, especially apartments and row homes. Detached and semi-detached are back to balanced conditions, so you still need to be prepared, but you're not racing against the clock like you did in 2021 and 2022. The extra inventory, longer days on the market creates space for conditional offers, inspection time, and reasonable negotiation. And if you're renting and thinking about buying in 2026, this is a good time to get pre-approved, narrow down your communities and property types, and start tracking what homes actually sell for, not just what they actually list for. My advice for sellers is that the days of pricing high and let the market catch up are behind us, at least for now. You're competing with more listings, especially in the condo and row segment. In detached and semis, you can still achieve strong results, but only if you are priced correctly from the day one and your home is well presented with professional marketing. You can expect a little bit more time on the market and more back and forth on price and terms, and a bigger gap between homes that are properly prepared for sale and those that are not. And my advice for investors: the numbers are becoming more interested again in apartment and some townhouse complexes while prices have adjusted while rents remain structurally supported by population growth. Cash flow and rate caps depend on a specific building and fees, so this is a very building-by-building conversation and not a citywide statement. The key advantage for investors right now is the choice. You can be picky. Let's sum this all up. Calgary is moving out of ultra-tight conditions of the last few years and more into a balanced market. Detached and semi-detached homes are holding relatively steady, while row homes and apartments are seeing more meaningful price adjustments driven by extra supply from both resale and new construction. For buyers and investors, this creates opportunity. For sellers, it means strategy matters more than ever. If you're wondering what those numbers mean for your specific property or for your buying plans, I'm happy to run a community level breakdown and a community game plan for you. You can reach me at my contact information below. And if you find this helpful, please like this video, subscribe and share it with someone who is also trying to make sense of the Calgary real estate market right now. Thank you for watching and see you in the next update.